how Nigerian banks' market cap tripled to 10.5 trillion in 6 years. In 2018, the total market cap of Nigerian banks was just over 3 trillion naira. Today, it's more than 10 trillion naira. That's over 3x growth in just 6 years. So, what changed? Are Nigerian banks just printing money, or is there more to this story? Let's break it down. Why are banks growing so fast? The short answer: high interest rates, digital transformation, and smart banking reforms. The Central Bank of Nigeria (CBN) has played a major role in the aggressive monetary policies that have reshaped the financial sector. As of February 2025, the monetary policy rate (MPR) stands at 27.5%, one of the highest in recent history. This makes borrowing more expensive for businesses, but it also means banks earn more on loans and investments, increasing their profits. Meanwhile, Nigeria's shift to digital payments has taken off. According to the Nigerian Interbank Settlement System (NBISS), electronic transactions in 2024 reached a staggering 1.07 quadrillion naira, a 79.6% jump from 2023's 600 trillion naira. That's a massive increase in cashless activity, and banks are cashing in. Banks and the digital economy. One of the biggest indicators of how important Nigerian banks are to our digital economy is the growth of point-of-sale (POS) transactions, which reached 19.4 trillion in 2024, an 81% jump from 10.73 trillion in 2023. This growth reflects how more Nigerians are relying on digital tools for everyday payment, and banks benefit through transaction fees and partnerships with fintechs like Flutterwave, Opay, and Moneypoint. By riding the digital wave, Nigerian banks have become major players in Africa's fintech future. Which bank is at the top? Between 2020 and 2025, the market capitalization of Nigerian commercial banks has seen significant shifts. The years before President Bola Ahmed Tinubu's administration were marked by steady growth and occasional market corrections. However, post-2023, the sector witnessed accelerated growth, reflecting increased investor confidence and supportive policies to strengthen financial institutions. As of March 22, 2025, the combined market capitalization of Nigeria's top commercial banks reached a historic 10.5 trillion naira. GTCO leads the sector with a valuation of 1.99 trillion naira, followed closely by Zenith Bank at 1.87 trillion naira. UBA commands a market cap of 1.26 trillion, while Access Bank stands at 1.15 trillion naira. First Holdco, parent company of First Bank, follows at 969.2 billion naira, with Fidelity Bank reaching 898.7 billion naira and Stanbic IBTC at 796.9 billion naira. Among these, Fidelity Bank has been one of the most impressive climbers, skyrocketing from a market cap of just 73 billion in 2021 to 898.7 billion in 2025, an astonishing 1,100% increase. What challenges exist? Despite this impressive growth, Nigerian banks face challenges such as failed transactions, settlement delays, and high transaction fees. Other critical issues include a high non-performing loans ratio, limited access to finance for SMEs, weak regulatory environment, cybersecurity threats, and infrastructure gaps. Amid these challenges, Nigerian commercial banks are expanding across other African countries, increasing their footprint and regional influence. But to truly win, they will need to fix the cracks in the system and deliver value not just to shareholders, but to everyday Nigerians too.